going to take a look at the breweries sector in Nigeria. Yesterday it was pharmaceuticals. Today it's breweries. Loving it, just loving it, dissecting it with some of these great asset managers that we have in Nigeria. Another great asset manager joining us, of course, Afrinvest Research and Consulting. There's the report, Brewing Back to Profitability. Damilare Asimiyu is a macroeconomic strategist at Afrinvest Research and Consulting. He joins us now to discuss. Damilare, good morning to you, sir.
Good morning, Ritus. Thanks for
Yeah, you're welcome. You're welcome. So, what underpins this report? And, fantastic stuff, great stuff. I enjoyed reading it. I encourage everybody to download it. So much information in there. What underpins this report with respect to the brewery sector bouncing back to profitability?
Thank you once again for having me. Over the last 5-6 years, the brewery industry in Nigeria has been largely pressured. More importantly, the pressure became more pronounced in 2023-2024 following the reform policies rolled out by the federal government, which exacerbated the negative performance. In 2023-2024, the industry posted a pre-tax loss of about 256. And last year it became worse. It raised
billion,
up,
right?
Yeah, billion naira.
Yeah.
So it raised up to 356, almost 100 billion addition last year. Now the underlying driver or underlying cause was the FX liberalization, energy liberalization, as well as the removal of subsidy of energy. So that really hit the brewers significantly. Plus elevated cost of financing. We recall that last year the CBN hiked the policy rate by almost 875 basis points to 27.5. So the combined effect of that weigh on an industry that has been struggling. Like I said, it didn't just begin, because if you look at the trajectory of pre-tax loss in that industry since 2018, save for 2021, right, where industry recorded pre-tax loss of about 9 billion, it has been very challenging. But it was not as huge as what we saw in 2023-2024. Of course, if you exclude international breweries before 2022, you have decent profit, being reported by brewers. If you exclude international breweries, for instance, in 2022, there's a profit of about 6.2 billion. So basically, there were a lot of factors that played out before that time. International breweries has a legacy debt, which has always weighed on its performance, but that was offset last year following a rights issue. But more importantly, the sector went under a tensed environment, so to say, in the last 2 years to 2024. But the fourth quarter of 2024 marked a turning point, which battered this title, bringing back to profitability, because Q4 2024, we saw remarkable turnaround, and that has been consolidated upon in Q1 this year. We saw the industry profit moving from about 7.4 billion in Q4 last year to 81 billion by first quarter of this year. So all else being equal, barring any major macroeconomic shock that will rattle the whole economy, we think we are back to profitability in the beer industry.
Hey, that sounds good. That sounds good. Let me get to these charts, and thank you so much for that breakdown there. The global breweries industry, I think you got an orange line, which is for breweries, and then I think a blue or black one for the global GDP. And I thought it was pretty interesting that if we can get, there it is. Okay, blue, sorry, for global GDP. Now, 2020, I'm guessing, Damilare, that's COVID, right? So, absolutely. Yeah, big dip. But I thought people were staying home and drinking. No? Am I incorrect? Help me out. So why that massive? I thought people, if you're staying home, you're eating more pizza and you're drinking more because you can't go out. And then so talk to us about that recovery that we now see on your chart.
Thank you very much. So the dip you are seeing in 2020 was more of a reactionary one. Okay. Don't forget that in 2020, COVID affected more than 700 million people globally. Yeah. We have mortality or fatality rate of about 7 million. 75% of the fatality rate were people with underlying conditions. And so one of the preventive measures that the WHO and other global health organizations came up with immediately when that virus broke out was for people with underlying conditions to abstain from alcohol, sugar, and a lot of... So that drove a lot of caution in terms of consuming items like that. So why COVID drove global economy growth down by less than 10%, the brewery industry suffered more, because even though people were at home, right, everybody became scared, because several people, especially in the first 2-3 weeks of the pandemic before vaccination was discovered. So that was why the dip in the brewery industry was sharper than global GDP. And again, don't forget that brewery products are discretionary products.
Right.
They are not essential.
Gotcha.
Exactly. So during COVID, businesses were shut down. People were home. People could not make more money. So the little you have with you also want to prioritize it. So food first, then every other thing.
Before discretionary drinking.
Yeah.
Great stuff. All right, another chart. There's a breakdown of market share for the global players. I mean, is this, my question to you here with this chart, is this a like ultra competitive market here? You got AB InBev Group 9.7, Heineken Group at 6.5, and then you got Kirin, Diageo in third at 4.5, and then Carlsberg, Kirin and so on. So it's ultra competitive.
So on a broad scale, right?
Yeah.
The brewery industry is a monopolistic competitive market.
Okay.
You have a lot of players. But even with that, you can still segment the players in that industry into two buckets. You have the very big and you have the moderate. Now, among the very big are the names you have on the screen. This is an industry that have more than 1,000 players globally. But we have some that control significant market shares. So among those that control significant market shares, which are the ones captured here, the level of competition there remains very, very tight. They are very sensitive to each other in terms of the move of each other. But by and large, AB InBev still remains the largest brewer by volume, even by sales. Their global earnings last year was in the region of about $59 billion. So that gave them an edge over Nigerian. So it's a very competitive industry. It's an industry you also have a lot of non-regulated players. But by and large, it's an industry that is very competitive, and you can't just be careless in that industry as a leader.
There were some factors that you listed that you see impacting the industry going forward. I think you mentioned supply chains, and can you just quickly touch on those 5 factors for us? Yeah.
I think number one there is that we believe that premiumization will be extended this year globally.
Okay.
So what does premiumization mean? Premiumization is a strategy used in a monopolistic competitive industry, whereby a multi-product firm, after studying the market, especially in turbulent time, you then intend to increase only the price of inelastic products. So you are a multi-product firm. Because of economic challenges, the demand for your products are not as good as it used to be. So you then study the ones that have the highest inelastic characteristic, that the level of drop in demand is not so sharp. Then you try to hike the price to offset the economic pressure. The ones with very elastic characteristics, you leave their price. The essence of that strategy is to reduce the cost pressure that you are facing as a business, so as to be able to maintain a decent bottom line. And that is what played out globally last year. Global volume fell by 29 basis points, according to estimate by Statista, to 1.78 billion million hectoliter. So, but more importantly, profitability was up 3.3%. In fact, the same as global GDP last year. So what made the difference if volume fell, but there was profit was up, is that brewers, implemented that strategy. Strategic brand had their prices increased. And that also played out locally. Twice last year, some of Nigerian major brewers increased price. They did in February, they did another one in May, after observing market reaction to the initial one. So they deployed that strategy to sustain themselves. Then we also talk about decarbonization. That one has to do with cleaner energy. That one is a global goal. The brewery industry players too are keening into that, trying to reduce carbon emission. Most advanced countries have a target of 2030. We have Heineken investing significantly. And last year, they actually succeeded in reducing their carbon emission by more than 20%. So they are pushing that even in their subsidiaries in Nigeria as well. Nigerian Breweries has invested in a lot of cleaner energy power sources. So we think that trend will continue. We also talked about the fact that the industry this year will be shaped by strategic M&A and exit. Now, last year, Diageo exited Nigeria, selling their 52.0% stake to Toleram. Of course, it's a good one because we have a new player coming in that also understands the environment. But Diageo didn't take that decision in Nigeria alone. Similar thing was done in Cameroon. Diageo exited Guinness Cameroon, selling to a French-owned company, Chapa Beer, something like that. So more importantly, we think that strategy will continue because brewer will always want to look for where the pasture is more greener. Let me use that word.
Of course.
Carlsberg early this year acquired Coca-Cola's license in Kyrgyzstan and one other country very close to it in order to expand its non-alcoholic brand. So basically, we think that dynamics will continue this year. Brewers will look for where they can see opportunities, acquire when there's a need for that, and exit markets that the prospect of revenue are not very buoyant.
You also mentioned there was deepness, my favorite topic. Everybody knows what my favorite topic is. Deepening of AI in B2B sales. So you're going to use artificial intelligence to try to get that going?
Yeah, so while we have seen Heineken Global, what we've seen them done in the last year is that they have an AI-driven platform that has not been operational in African country, but in Europe, in the advanced market, where all their first leg or first-hand buyers, the businesses, they are captured on that platform such that if there's a demand above your supply as a middleman, even if the factory is not able to deliver to you on time, the platform is able to prompt the next major distributor with substantial volume to get that volume across to the facility or the business where the demand is being placed on. And the customer will not know there was any movement. So there is an order being placed to your home store for a sizable volume of particular drink. You don't have that. It won't be able to, the factory, the major factory in the country won't be able to deliver to you at the next possible time. Then there's another retail or a major supplier that have that. The AI connects buyers to their closest store. So it's an integration that is very seamless. Yeah. It also enables home delivery. So it's a fascinating one. Last year, based on Heineken's report, 13 billion transactions from over 670 million people were facilitated through that platform. So it's making the purchase of brew product more seamless and more efficient for the buyers. Very quickly, can you touch on product innovation to match Gen Z trends? Gen Zs are drinking? Of course, Gen Zs like to try a lot of things. Yeah. The older generations, some prefer pure beer, some prefer pure spirit. But Gen Zs like to, innovate. I'll use that word. They want something like beer that are form of cocktail. Yeah. They want hybrid beers. So having studied the characteristics of Gen Z and their demand, Heineken did, unleashed a product to the market last year. Not in Nigeria here. First, they tried that in Philippines. They called the product Tiger Soju. So it has a lot of variant that has different fruits and a lot of things to make it like a cocktail. And it's making progress in those countries. And they have plans to extend it. So one thing about Gen Z is that they just like to innovate. So if I have beer, can I mix it with wine? Can I mix it with pineapple? So brewers are trying to make that available to capture buying power. The reality is that exactly, you can drive a lot of volume from that. Yeah. Global population distribution now suggests that people within the age of 15 and 45 accounted for more than 50%. That's a market you can't play with, even though they may not have the financial power to do large purchase, but volume turnaround can do good for you. Look, this is a really great report. Okay, I want to quickly squeeze in one more question. You've got a chart showing the revenue surge for, I think, the brewers in Nigeria. And you mentioned Dirty December in the reports and Q4, of course, festive season. Now, thank you. The great chart here showing that growth. Now, Dirty December, primarily was Lagos, was it not Damilare? Is Lagos the commercial capital of Nigeria, the linchpin or the crux of the breweries industry? Thank you, Rutis. Yeah. The reality is that Lagos is a unique market that any sector, any producer cannot play with. You need Lagos. This is a state, or let me say subnational, with a GDP of almost 1/4 of Nigeria. Yeah. Now, why was that this December mentioned? There were a lot of festive activities in December. What we actually captured there is that the beginning of the turnaround that has raised the hope that brewers return to profitability started in Q4. And that Q4 was a period where there were a lot of festive activities. Now, that Dirty December was an example. There was a Calabar festival too that shook the country and so many other ones. Now, brewers benefited from that because their product is a derived demand. Statistics shows that about 111 billion, 11.5 billion was spent into hotel and tourism for Dirty December alone. And given the fact that brewers' products are derived demand, so people lodge in hotel, lodge in bar, foreigners who came on tourism, I mean, out of every 10, you're going to be seeing 4, 5 that have a brewery product with them. So that helped their sales. In fact, last Q4 2024 was the brightest quarter for brewers in Nigeria.
Wow.
For 2 reasons. They had the highest revenue jump in that quarter. Secondly, that quarter was the first since Q1 2022 where all the 4 listed brewers posted profits. So it's not by accident. It's as a result of some of the other macroeconomic dynamics, because we have a lot of influx of people into Nigeria at that time, a lot of festivity activities, and because of the derived demand nature of the product, it impacted on their earnings.
Awesome stuff. Again, really good report. Okay, real quick. Market share. You did note that, if I remember this correctly, international breweries and NB, as Nigerian breweries, both increased their market share. However, but Guinness and Champions breweries edged down just a bit. Yeah, there it is. There's the chart. So NB is in blue, Guinness is in gray. I mean, the gap between NB and everybody else is quite large. International breweries in red, Champions in yellow. So what was the result of that? What was it? Just
a number of factors are responsible for this. Let me start with Guinness. The unique thing, or what actually affected Guinness on this chart, is the fact that their financial year, the calendar of the financial year, differs from others. While others run January to December financial year, Guinness run July to June. Now, the FX crisis, PMS price liberalization, and all the policy, all the reforms that hit brewers badly from 2023 began in June, coming to June 2023, post coming to office of the new government. So the full effect of those macroeconomic shock told on Guinness's performance, because their own financial year began from July 2023 and ended June last year. And you remember that towards June last year, we have even PMS prices running to almost 1,003 level, exchange rate running towards 1,008. So the negative effect of Q2 2023, H2 2023, and H1 2024 told on their performance. That's on one side. While the other brewers, they only suffer part effect, because in 2023 they've done well in H1. H2 was not fine, so they were able to minimize their impact. But the good thing with this also is that Guinness stands the chance of outperforming others in terms of rate of growth this year, because they benefited significantly, from that Q4 performance, which is their own Q2 for the 2025 financial year. So we're expecting them to have a revenue jump this year that will not be less than 60% in the base case scenario. But they may not be able to fully recover the market share they lost for other reasons. One, they've discontinued the supply of some of their premium brand last year from Heineken Global due to FX crisis. Then secondly, you have seen Nigerian breweries fully acquire distilled wine and spirits. So before, Guinness is the only total beverage alcohol company in Nigeria that plays in almost every space. But they have taken out some of their product due to FX effect, because they import that from their parent company. Nigerian brewery has acquired a spirit-focused firm called Distel. They did 80% last year and completed the acquisition this year, the remaining 20% around February, March. So Nigerian brewery is gaining more road into that space. So maybe that they now have more volume to churn out, more product variants, and that should cascade to something. Economies of scale would also come out of that. And so it will then be difficult for a brewer that has reduced some of its own products, to easily catch up with that. But we see Guinness returning, taking back at least 5 to 6% of the market share. But we don't see them returning to that 22, 23 levels this year. Maybe in the coming year, if they're able to innovate and attract customers, they might be heading back to the level they were in 2022.
Damilare, I could continue this. My colleagues on Newsday will be upset with me. I could eat into their segment to talk more about this report. Everybody should download it. About 40-something pages of in-depth knowledge on the brewery sector. Damilare Asimiyu, Macroeconomic Strategist, Afrinvest Research and Consulting. Thank you very much for the deep dive. Really enjoyed it.
Thanks for having me.